What if I told you that the secret to mastering the future of investing is hidden in the words of a man who still reads 500 pages a day, avoids fads like the plague, and made over $100 billion by doing the opposite of what everyone else was doing? Warren Buffett doesn't believe in chasing trends. He doesn't care about crypto hype, meme stocks, or flashy tech that burns out in a year. Yet, this 94-year-old investor holds the keys to thriving in a world dominated by AI, automation, and market chaos. The way he sees the future of investing will shock you, not because it's complicated, but because it's dangerously simple. So the real question is, are you ready to learn the timeless strategies Buffett believes will dominate tomorrow's markets, while others panic and lose? In this video, we're diving deep into the investment vision of Warren Buffett. Not just what's made him rich in the past, but how his philosophy prepares you for the future of wealth building. We'll explore how Buffett thinks about new technologies like artificial intelligence, sustainable energy, and the shifting global economy. We'll break down what he's buying, what he's avoiding, and how his age-old rules can give you a massive advantage, even in a market that feels nothing like the one he started in back in 1956. If you want to build real, lasting wealth and navigate the uncertain world ahead with confidence, you're about to hear the blueprint from the Oracle of Omaha himself. Part 1. Buffett's Future Investment. Principle 1. Circle of competence will matter more than ever. Warren Buffett has repeated this idea for decades: know your circle of competence and stay within it. But in a world rushing toward AI, quantum computing, and decentralized finance, that advice is no longer just wise. It's essential for survival. Think about it. The future is noisy. Every headline screams at you about the next big thing. AI will replace jobs. Buy this new altcoin. This startup will be the next Amazon. But amid that chaos, Buffett urges calm. Why? Because the human brain still has limited bandwidth. And when markets move at lightning speed, your ability to filter, focus, and make rational decisions becomes your most powerful weapon. Buffett's circle of competence isn't about knowing everything. It's about knowing what you know deeply and refusing to risk your money outside of that space. If you understand healthcare, invest in healthcare. If you know energy, stick to energy. You don't chase tech just because the herd is running toward it. You wait, you study, you understand. Here's where it gets profound for future investing. As innovation accelerates, the temptation to act without understanding will skyrocket. Artificial intelligence will promise to make your decisions for you. Fintech apps will give you one-click access to investments you barely recognize. And that's dangerous. Buffett's vision of the future isn't anti-tech, it's pro-wisdom. He believes technology is a tool, not a replacement for judgment. When he passed on early Bitcoin investments, even when others became billionaires overnight, he wasn't dismissing the idea of innovation. He was honoring his circle. He said, "I don't know enough about it to invest in it." That restraint, that humility, is the real genius. Because the future will reward clarity, not confusion. To apply this, the more complex the market becomes, the simpler your approach must be. Future investors will need to say no more often than yes. And instead of being impressed by rapid gains, they'll learn to admire consistent returns from sectors they actually understand. Buffett's circle of competence is like a moat. It protects your capital from overconfidence. And in the future, that moat will be the difference between building wealth and losing it overnight. Principle 2. Bet on businesses, not buzzwords. Warren Buffett has always been laser-focused on one thing: the underlying business. Not the hype, not the pitch, not the social media momentum, but the actual cash-producing engine behind the scenes. And this thinking will be even more vital in the future. Let's break that down. In the coming decades, we'll see entire industries rise and fall within a few years. Just think about how fast the crypto wave surged and crashed. How quickly companies like WeWork or Theranos rose to stardom, only to crumble under the weight of unsustainable business models. And yet, amid all that, Buffett kept placing his bets on simple, understandable businesses with solid fundamentals. Why? Because buzzwords don't pay dividends, but boring businesses with strong cash flow do. In the future, investing will feel like a slot machine to the average person. Robinhood, eToro, TikTok traders, they'll all make gambling look like investing. People will chase metaverse ETFs, AI coins, or climate unicorns without ever asking the one question Buffett always asks: does this business make money consistently? His vision is painfully practical. He doesn't buy stocks, he buys companies. He imagines owning them for decades. And that mental shift changes everything. It forces you to evaluate leadership quality, long-term demand, pricing power, cost control, real business metrics, not likes, not headlines, take Apple. Buffett didn't buy Apple because it was a trendy tech company. He bought it because he saw it as a consumer product business with an ecosystem people are emotionally and practically tied to. He saw customer loyalty, recurring income, and excellent management. Apple wasn't a bet on tech. It was a bet on customer behavior. That's why it's now one of Berkshire Hathaway's largest holdings. Future-focused investors will have to develop this lens. Ask, if this buzzword didn't exist, would the business still survive? Strip away the hype. If a metaverse platform isn't profitable without the word metaverse, it's not a business, it's a bet. This philosophy is liberating. You don't need to be early to trends to build wealth. You just need to be right about the business. The future will favor those who look past the noise and search for cash flow, durability, and simplicity. Buffett's vision isn't outdated, it's just immune to fads, and in a future ruled by noise, his quiet approach might just be the loudest advantage you can have. Principle 3. Time will beat timing. There's a reason Warren Buffett often says, "Our favorite holding period is forever." That's not just a cute phrase. It's a direct challenge to the way most people think about investing, especially in today's fast-moving, dopamine-driven markets. And in the future, this idea that time in the market beats timing the market will separate the truly wealthy from the perpetually worried. Let's face it, the average investor today is addicted to movement. Every dip looks like a disaster. Every headline feels like a signal to act. And with more access to real-time data, more algorithmic predictions, and more digital trading platforms, that addiction will only grow stronger. But Buffett's wisdom offers something radically different: stillness. He knows that the market is designed to transfer money from the active to the patient. And in a world that's only getting faster, patience becomes a superpower. Here's why this matters in the future. Timing the market. Getting in at the bottom, jumping out at the top. Dancing in and out of volatile assets will become even harder. Artificial intelligence will be trading billions in milliseconds. Hedge funds will use satellite data to analyze store parking lots. Insider knowledge will be swallowed by machine learning. You will not win by being faster, but you can win by being longer. Buffett believes that compound interest is the most powerful force in investing, and it only works with time. Think of your investments as apple trees. If you keep digging them up to find better soil every few weeks, they'll never bear fruit. But if you plant them in solid ground and let them grow, the compounding effect becomes unstoppable. Take Coca-Cola. Buffett didn't buy it for a quick gain. He held it for decades, collecting dividends while the brand grew stronger worldwide. That's not timing. That's trust in the business, in the brand, and in time itself. In the future, investors will need to ask themselves, am I investing or am I gambling? The difference lies in your relationship with time. Buffett teaches us that investing isn't about predicting the next big wave. It's about staying steady on a ship you believe will cross the ocean. And yes, there will be storms, recessions, market crashes, global events. But Buffett's answer remains: don't sell just because things look scary. If the company's fundamentals are intact and your thesis still holds, the best move is to do nothing. That might sound boring, but the future of investing will reward the boring. It will reward those who can wait. It will reward those who choose time over timing. Principle 4. Ignore the noise, watch the cash. Warren Buffett has always been suspicious of flashy narratives. He doesn't invest based on political news, global forecasts, or viral opinions. His focus? Cold, hard numbers, especially cash flow. And in the future, when noise becomes deafening, this principle will become your compass. Let's talk about what noise really means. In the world ahead, you'll be bombarded by economic projections, AI-generated finance tips, market influencer opinions, and sensational financial news cycles. One moment, the dollar's collapsing. The next, gold is soaring. The next, AI stocks are guaranteed to explode. Everyone will have a take. Few will have a clue. Buffett doesn't play that game. He filters all that noise with one question. Is this business producing real cash? Not projected revenue, not potential market share, not future user growth. Actual, measurable, consistent cash. Why? Because cash is truth. It doesn't lie, it doesn't spin, and it doesn't need interpretation. And in the future, as financial storytelling gets more sophisticated and digital reporting gets more complex, cash flow will be the ultimate reality check. Let's take an example. Think of the electric vehicle boom. Everyone's talking about it. New players are entering every month. Some are valued in the billions without delivering a single car. But Buffett doesn't chase the sizzle. He wants to see the stake. Who has the supply chain? Who controls costs? Who has pricing power? And most importantly, who is turning a profit? He doesn't need futuristic visions. He needs financial discipline. This is why Buffett prefers dull-sounding metrics like return on equity, operating margins, and free cash flow. Because when a company generates consistent cash, it means people value their product. The business is efficient, and the leadership is competent. Period. In the future, the ability to ignore hype will be rare. You'll need discipline. You'll need mental armor, but Buffett's method gives you that. It says, forget what everyone is saying, just follow the money. And he means real money, not share price movement, not market cap spikes, not Reddit upvotes. Just actual dollars flowing into the business and out to shareholders. This focus gives clarity. It helps you cut through emotional investing. When others panic during a market dip, you'll look at your businesses and ask, is the cash still flowing? If yes, you hold. Maybe even buy more. If no, you investigate. This is how Buffett stayed sane during the dot-com bubble. While everyone else bought companies with no revenue, he stayed out. Why? Because they didn't produce cash. They only produced excitement. And excitement doesn't pay dividends. In the next decade, expect a flood of digital assets, tokenized real estate, synthetic ETFs, and decentralized autonomous organizations promising massive returns. But ask the Buffett question, where's the cash? If you want to invest like Buffett in the future, you don't need to be flashy. You need to be focused. Let others chase the news cycle. You chase the cash. Excellent. Let's now wrap up this powerful breakdown with the fifth and final core principle in Warren Buffett's future investing vision, delivered as an in-depth monologue suitable for audio-only, faceless YouTube content. Principle 5. Invest in integrity. People will matter more than projections. In an era dominated by artificial intelligence, machine learning models, algorithmic trading, and automated forecasting, Warren Buffett's future-forward advice seems almost old-fashioned. When we look at a company, we look first at the people who run it. But here's the twist. This human-centric approach is not a relic of the past. It's the roadmap for navigating the chaos ahead. Buffett's approach has always been this. Buy companies run by people you admire, people you trust, people who treat shareholders like partners. He calls it betting on jockeys, not just the horses. Because a great idea, a groundbreaking product, or a massive market is worthless if the people running the business are greedy, reckless, or dishonest. As we move into the future, where financial models will be more convincing than ever and forecasts more polished than they've ever been, integrity will become the rarest and most valuable commodity. Think of it like this. Artificial intelligence can predict trends, optimize logistics, and even write earnings reports, but it can't replace trust. It can't replace judgment. It can't replicate the gut-level courage of a CEO making a hard decision in a crisis. That's where leadership shines, and Buffett knows it. When you buy a stock in the future, you're not just investing in a product. You're investing in a set of decisions, millions of them, made by humans. And those decisions will be shaped by values, character, and integrity, not algorithms. This is why Buffett keeps investing in CEOs like Tim Cook at Apple. Not because Cook is flashy, but because he's consistent, rational, and deeply committed to building long-term shareholder value. That's the kind of leadership that survives market crashes, public backlash, technological disruption, and keeps the business moving forward. Let's not forget, many companies fail not because of poor products, but because of poor leadership. Over-leveraged, overconfident, obsessed with short-term stock prices. In the future, these flaws will be amplified. Leaders will have access to more capital, more tools, and more temptations to fake growth or chase unsustainable trends. The result? More risk for investors. Buffett's solution is simple but hard. Only partner with people you'd trust with your life's savings, because that's exactly what you're doing. And here's the kicker. This principle doesn't just apply to companies, it applies to investment partners, fund managers, even the content you consume about money. In a future where anyone can spin up a website and claim to be an expert, your ability to judge character will matter more than ever. Buffett believes that integrity is like interest. It compounds. A leader who is honest today will likely still be honest tomorrow. A leader who hides the truth today, that lie grows, and so does the risk you carry. Now think about this. In a world where deepfakes can mimic CEOs, where AI can simulate board meetings, where companies can manipulate sentiment using bots, how do you protect your investments? You do what Buffett does. You get back to basics. You read annual letters. You listen to earnings calls. You track behavior over time, not headlines in the moment. And when you're evaluating a company, ask yourself, would I want to work for this person? Would I trust them to run my family's business? Would I want them managing my child's future inheritance? If the answer is no, walk away, no matter how great the numbers look. Because in the end, Buffett knows something the world keeps forgetting. Numbers can lie. Charisma can fade. But character? Character holds. The future will be filled with fake growth and artificial intelligence, but it will also reward real leadership. The kind that stays when things get tough. The kind that owns mistakes. The kind that thinks in decades, not quarters. So when you're choosing where to invest, don't just read the balance sheet. Study the faces behind it. Because Buffett's ultimate bet, his greatest hedge against uncertainty, has always been people. And in the future, that won't change. In fact, it may be the only thing that truly matters. So now you know. The future of investing won't belong to the loudest voices, but to the calmest minds. It won't reward those who chase the next shiny object, but those who hold fast to unshakable principles. Warren Buffett didn't become one of the richest men in history by predicting markets. He did it by understanding people, by trusting time, by ignoring noise, by betting on integrity, and by sticking to simple, timeless truths, even when the world screamed for complexity. Now it's your move. If you want to thrive in the investing world that's coming, start by unlearning what Wall Street has taught you. Don't follow the hype, follow the cash. Don't chase the clock, trust the compounding. Don't buy companies, invest in people. And most of all, don't try to time the future. Build one. Because 10 years from now, you'll either be grateful you listened today or wishing you had. And if this resonated with you, if you feel the shift, if you sense the urgency, if you want to build real wealth the Buffett way, then the next step is simple. Go watch our video on the power of compounding, how $100 can change everything. It'll show you how to turn today's small decisions into tomorrow's financial freedom. The link's waiting for you right now. Buffett's vision of the future isn't just about investments. It's about becoming the kind of investor the future will reward. Start that journey today, because the best time to invest was yesterday.